Hey traders, welcome to Charts and Giant Mugs of Coffee. Hope everyone is doing well this Wednesday morning. It's an unusual Wednesday because tomorrow we have a bank holiday, and then Friday we come back for non-farm payroll. We've been talking about the importance of the jobs numbers based on the dual mandate that the Federal Reserve has. And so they're watching these jobs numbers, and we are watching these jobs numbers. And when the jolt came out yesterday, we saw what it did. It was a dramatic move to the downside because the number came in better than expected. So wait a minute. So good news is bearish again. That's exactly where we are when the employment picture looks healthy. It just simply doesn't put the pressure on the Federal Reserve to remain accommodative and cut maybe one or two more quarter point cuts between now and say, it looks like Fed fund futures are pricing in the cuts to be completed by May of this year. Now that can always change, but for now, based on the data, based on what we see, not what we think, not what we guess, right? So what we have with the data, it looks like by May, one or two at most quarter point cuts. Good data, strong jobs numbers, more job openings, lower unemployment are all going to be reasons to maybe stick with just that quarter point. And equities are not going to like this. You know, a lot of what we've seen, this chop since the 18th, where Jerome really officially, right, and we didn't have to presume, he just flat out said they're pretty much winding down the cuts. And with that comes the chop, which is something that we've only seen earlier in the year when Fed members disagreed about the path to monetary policy, the rate cuts, and when we had the yen crisis. I mean, that's really about it. So now we're back into a pretty, if you want to think about what chop is, it's uncertainty, right? Every bit of price behavior does reflect psychologically what broadly traders and investors are thinking. And this just really reflects a massive amount of uncertainty. That's where we are. And uncertainty doesn't mean that we're going to sell off. Uncertainty certainly doesn't mean we're going to rally. It simply means we're going to stay in a range. And by the way, this range is still very much near, the all-time highs. So let me guess, Rog, you're not bearish. No, I'm just not as bullish as I once was because there aren't as many, when I look at I keep a bunch of planners. I have this planner where I keep a list of symbols and ideas. I love planners. It's probably something I borderline need an intervention for. That in books. And I have this thing right here where I keep, again, different ideas, different symbols, different setups that are on the radar. Always write things down. Always. You get an inspiration, write things down. And then you can go hunt down the validity of that idea. I don't know how many of you, I never got into Yellowstone. I know that's a super popular show. What is his name? Taylor Sheridan. He's been writing all these really popular shows. Well, he's writing now a show called Landman. It is not PG. It is not on regular television, but it's about crude oil. So I'm watching this going, gosh, I haven't been digging into crude a whole lot lately. You never know where inspiration is going to strike. Always write things down. Right now, crude is on the cusp of breaking from the bearish hemisphere to the bullish hemisphere. And I'm going to keep a really close eye on that because if that rising tide, right, can get across, say, $76 a barrel, and it then starts to take oil and gas explorers, oil services, energy stocks, so XOP, OIH, XLE with it, we're going to see maybe something different. We haven't seen a lot of energy from energy, right? It's been lacking energy. It's been lacking the very thing it's supposed to give us. But yeah, I sort of think and watch this Landman show. You know what? It was called Landman. I haven't looked at crude in a minute. And there's a reason I haven't looked at crude for a while. But if we can break above that level, if what is resistance can become support, this could get very interesting this year. And we'll definitely keep an eye on it. It's just not there yet, right? So again, I'll write it down. I'll write down specifically what I'm looking for. I'll write down what I like. I'll write down what I don't like, right? And I'll just keep that. And by the way, these are really cool. These are just magnetized sticky notes in this little binder. And I can tear the sticky notes off. I can move the little magnetized sticky notes to this standing metallic board that I've got. It's pretty cool. write down your ideas and track your trades. Yesterday in the free video, if you check that out, if you go to the Simpler Trading YouTube channel, you'll see that I did a pretty kind of a longish video. I guess it was maybe 12, 15 minutes, maybe 14 minutes. I don't remember. But it was a video that dove into the specifics of, look, if we want to swing trade in this environment, if you want to see what it is we do in the Sector Secrets Mastery, what worked last year? We grew an account last year, right? That's always the plan. Can we grow an account? Can we take whatever we had in our account on January 1 and have it just be a higher number on December 31? That's a win, right? What are the things that, not just this coming year, but every year that I do? What are the metrics we have to measure, right? What are the things that have helped me grow an account? Yeah, uptrends are always going to be around. They're just not as many, and they're easier to trade. So check out that video. I walked through all of that. And then pencil in, I don't have the date yet, but I would say roughly 3 weeks from now, I'm going to be walking you through 2024, what strategies and what tools I use to grow accounts, to put out trades in the Sector Secrets Mastery. And then we're going to tell you all about an immersion we're going to be doing for the next 3 months. So if you're looking for something to really gain some traction in this idea of consistent and steady account growth, a process that isn't about bells and whistles and 100% returns or whatever else, right? Do we have a couple 100% return months? Yeah. It's because the market was in a straight up uptrend. So when we look back on the year, you're going to see a lot of the returns were based on what the underlying market behavior was. So this is where there's a little bit of, say, sobering news. This is not Q1 of 2024, which was probably the best quarter that we had last year. Q1 was by far, other than 2020, I haven't seen a series of months like Q1. Q4 was pretty good, mostly because November was fantastic. Post-election, we saw that massive rising tide. Think of your trading as being, where can I find that rising tide and what is benefiting from the rising tide? It's really a mindset. It's not about finding exceptions to the rule. It's not about finding an uptrend in a whole host of weak stocks in a weak sector. It's not about meme stocks. It's just asking, where is their alignment? And the more alignment we have, the more opportunities we have, the better trading is. The less alignment we have, the fewer opportunities we have, the less follow through we have, right? These are just natural ebbs and flows, and we can't override them. That's the thing. We can't override that lack of a trend. We just have to be patient and wait for that cycle of trends to come around again. And I've been doing this for over 30 years. The cycles do come back around. The great traders know when their strategies work, and they can sit on the sidelines until it's that time again. I think people would be really surprised how much these traders that we respect, we read about, me too. I've got a bookshelf behind me full of different books of interviews with some of these traders. They're remarkably flat until there's time to do something, right? That patience, that waiting is something that just isn't talked about enough. And especially in this frenetic world of do something, do this, day trade, no. Sometimes doing nothing is probably the hardest thing. And that's what separates the 90% of traders who lose from the 10% of traders who can grow accounts year after year, decade after decade, right? So heads up for that, probably 3-4 weeks from now. But, stay tuned to Charts and Coffee. We'll keep, sharing what we did in 2024 with you and getting you all ready for that immersion to come. All right. So let's take a look at what kinds of, questions we've got. Thoughts on Visa and BSX. All right. Let's take a look at Visa. So Visa is in the group of the XLF. Now, this is really an interesting question that comes back to that concept of alignment that I was just referring to. This is very much where most traders are not going to go through this process, mainly because they either don't know or don't really respect high concentration weighting as the guiding reason for why the indices move in most of the important sectors. This is a tricky sector. This is the XLF. There are some one-offs here, and I would actually say there's 3 in XLF that might be worth keeping an eye on. Visa would not be the top of my list, actually. American Express, Citi, and Visa. And I would actually say Citi I like the best, then American Express, then Visa. So that's where you look at the entire. Most of it's red. Most of it's going lower. So think about how much harder Visa, American Express, and Citi are going to have to work. Now let's go up a little bit higher on the food chain. So we have the individual stocks at the bottom of the food chain. Go up a little bit. You've got the sector at the top of the food chain. We've got the indices. The Dow is heavy. And, if you're in the mastery, Rog, I know what the number one sector in the Dow is. How many folks know what the number one weighted sector in the Dow Industrial Average is? And it's not industrials. There's your first hint. It's financials. It's financials. So if the Dow is heavy, the financial sector is going to have to work that much harder. And if the financial sector is heavy, those individual stocks will as well. But those would be the three that I would keep the closest eye on. Your other question was BSX. All right, Boston Scientific. That's a gorgeous uptrend, right? That's a gorgeous uptrend. So then the way we want to think about Boston Scientific is pretty easy. First of all, buy the dip. But I think more so than that, what I like to know is when I see an individual stock sort of doing its own thing, meaning separate from the broader averages, separate from what's happening kind of largely in the market, I ask myself, well, what group is this in, right? What group is BSX in? Where is it heavily weighted? And are there other names like BSX moving? And for the most part, when you look at BSX, you'll see some growth equity sectors, but for the most part, it's in healthcare. It's in medical devices. The ETF is IHI. You'll see it weighted a little bit lower, but weighted in healthcare, XLV. So is healthcare a great sector? It looks as good as it's looked probably in a year. Healthcare was one of the uglier sectors last year. Are there certain corners within healthcare that are finally showing a little bit of signs of life? Yeah, I would say there's three that are popping up here, AbbVie, Thermo, and Pfizer in a very ugly sector. But BSX is doing its own thing. So as long as we're cognizant of the fact that it's strong, even though the group that it belongs to is quite heavy, we focus on buying the dips and we're prudent about paying ourselves when we can, not when we have to. That's a great look. I mean, BSX would definitely be something where, yeah, you write down an idea, put it on the idea notepad and say, look, there are some interesting potential setups that are bucking the trend of what has been a heavy sector. The lower weighted stocks in XLV, like BSX, quite frankly, might be a really good way to go. So yeah, good looking name and definitely worth jotting down. Yeah, 100%. I would definitely jot that one down. So what you want to keep an eye on for BSX, I'll tell you right now, BSX is mostly green. I'd like to see two more green candles, but this is the way I would look at BSX. If we can get down to about 89.10 to say 87.25, that zone, and the closer we are to 87.25, the better. Buy calls in that lower part of that zone and proactively pay yourself as we get to about 92. So what that allows you to do is take advantage of a little bit of a move higher, but not presume we get a breakout. This is just a technique that I teach in the Sector Secrets Mastery for traders who have been breakout trading, but are tired of the whipsaws, tired of the false breakouts, tired of buying into a new high, only to see the pullback shake you out and then it go back in your favor, right? Who's been there, done that? This absolutely reduces, nothing eliminates problems in trading, right? Trading is hard, yeah? But it absolutely gives you a better chance than your run-of-the-mill momentum trader buying into a new high. You can say, look, I want to let that new high be something I benefit from, but I need a better positioning before that new high so I can at least manage risk and maybe pay myself along the way. And that's the way I would look at BSX. So thanks for the question, Jess. All right. Next up is taking a look at, let's see here, bear with me. All right, GR asks, good morning. For day trading indices, okay, in addition to the index chart, do I also analyze the top holdings or top sectors in that index? Yeah, absolutely. Yeah, absolutely. I do. I have 3 screens that I share in the Sector Secrets Mastery. One is the screen you're seeing in front of you. Another is a vertical alignment of the Russell, Dow, S&P, NASDAQ. And the third screen is a layout of intraday multi-chart sectors. Now, you don't have to have the same layouts that I've got to track what the meaningful sectors, by meaningful, gang, I mean those sectors that are high concentration weighted in the indices. There are a couple other websites you can use to help yourself out. One would easily be the Sector SPDRS. Sector SPDRS. That stands for S&P Deposit Receipts. And you can track some of the more important sectors here. Coifin is another one. I'm sure many of you see me do that one. Right? Those are all things that you can do. All right. So those are two websites or one. You know what? Let me show you what it looks like. This is what that sector layout looks like that I'm talking about. So what this is a layout where you've got the XLK, semiconductors, communications, consumer discretionary, financials, healthcare, energy, industrials, transports, regional banks. And then at the bottom here, I have a mixture of some metals and mining, gold miners, and then 2 defensive sectors, staples and utilities. And just to kind of round it out, I threw the VIX up in here. Not that that's a huge deal to me, but it's good to know what your average traders are looking at when it comes to some of the more common market internals, even though I don't particularly find them that accurate or useful, not better than looking at the structure of the index itself or the high concentration weighted sectors. It's good to know out there what some of these more sort of pulse of market sentiment more broadly, more generally is. So that's one of the layouts that we use in the mastery, and it just allows us to see things that, you know, frankly are influential. Those are all influential, and I'm just putting my window back there. All right, those are all influential indices, sectors to the indices that it's akin to sort of opening the, lifting the hood, looking at the motor and saying, all right, why is this motor not performing? And then you look at the individual cylinders, say, okay, not all the cylinders are firing. And the cylinders in this analogy are those sectors. Okay, so that's one of the layouts that we use. All right, gang, so tomorrow we have a bank holiday. Today it's going to be probably Friday-esque type trading. For traders who don't want to be in a situation to be looking at managing risk based on the Friday non-farm payroll, which comes out at 8:30. So you might see a little bit of winding down in positions because an hour before the bell on Friday, NFP comes out. And if you thought JOLTS moved the markets, non-farm payroll is capable of doing that and much, much, much more. So we might see a little bit of that. Again, I'm not ever predicting. I'm looking for scenarios that could happen. I write them down. And this way I'm just aware of, hey, keep an eye out for that. Keep an eye out for this. So I'm mentioning that right now. All right, gang, be good to each other, and I will see you. I don't know that I'm going to do charts and coffee tomorrow, but if I do, you'll see the notification.